As a globally renowned investment god, Buffett's investment strategy is mainly focused on long-term holding and obtaining high returns. Why is his investment strategy not suitable for ordinary people? Hello everyone, this is Brown's Wealth Management Watchtower. I am committed to building a visionary watchtower for you, allowing you to discern direction and move forward steadily in a complex and changing investment environment. Warren Buffett, as a globally renowned investor, is highly regarded for his value investing philosophy and long-term investment strategy. However, Buffett's investment approach is not suitable for everyone. The reasons behind this are multifaceted, involving investment philosophy, market understanding, psychological resilience, and other aspects. Among them, I believe the most important reasons are the following 5 aspects. Firstly, the difficulty of finding excellent enterprises. The identification of excellent enterprises requires certain professional knowledge in finance, industry, market, etc. Ordinary people may not possess these professional knowledge, making it difficult to conduct in-depth analysis from financial statements, industry trends, market competition, and other aspects, thus making it difficult to accurately judge the true value and potential of the enterprise. Finding excellent companies requires investing a lot of time and effort in market research, enterprise analysis, and other related work. Due to work, family, and other reasons, ordinary people often find it difficult to ensure sufficient time and energy for these tasks, which limits their ability to find excellent companies. The discovery of excellent enterprises often relies on a wide range of resources and channels, which ordinary people lack and have difficulty accessing high-quality investment opportunities and information. So, how should we find companies that are suitable for our investment? The simplest way is to choose companies with stable financial conditions and strong profitability, which can be evaluated at a glance by reviewing the company's financial statements. Next is to examine the brand value of the enterprise and its position in the minds of consumers. Strong brands often attract more loyal customers, thereby providing a stable income stream. Another thing is not to invest all funds in a single enterprise or industry, but to build a diversified investment portfolio to reduce risk. It is also advisable to choose companies from different industries for investment, so that even if one industry is severely affected, the performance of other industries can hedge this risk and make profits. Secondly, there is not much time for extensive reading and research. Buffett's success is partly attributed to his extensive reading and research. For most people, it is difficult to achieve such a large amount of reading and research, which is crucial for investment success. In a highly competitive social environment, many people face longer working hours, which makes it difficult for them to free up time for reading and research. Family obligations and responsibilities can also take up a lot of personal time and energy, especially for parents with children. Taking care of the family often becomes the primary consideration. The amount of information in modern society is enormous, and people need to filter and process it among the massive amount of information, which itself requires a lot of time and energy. The popularity of smartphones and social media has made it easier for people's attention to be diverted, reducing the time spent on deep reading and research. Finally, effective time management is crucial for freeing up reading and research time. However, not everyone possesses good time management skills. How to utilize fragmented time for efficient reading in order to find suitable investment opportunities. To determine your investment goals, such as looking for stocks with long-term growth, high dividend investments, or venture capital in emerging industries, having clear goals can help you be more targeted when reading. Subscribe to financial and economic-related magazines, journals, or newsletters that can provide professional and in-depth market analysis and investment advice. Divide large information into small parts and focus only on a small portion of relevant content each time, for example, following news from one industry one day and reading updates from another industry the next day. Taking note of key information and your thoughts while reading not only helps with memorization, but also serves as a foundation for subsequent in-depth analysis. Finally, it is about reflection and adjustment, reflecting on the investment results to understand which methods are effective and which ones need improvement. This will help you make wiser investment decisions in the future. Thirdly, there was a misunderstanding of Buffett's investment philosophy. Many people believe that Buffett's investment philosophy is to hold stocks for the long term, and even equate long-term holding with value investing. Buffett does advocate for long-term investment, but that doesn't mean he will blindly hold any stocks for the long term. He emphasized finding high-quality companies with long-term growth potential and buying them at the right price for long-term holding. However, he will also adjust his investment portfolio in a timely manner based on market conditions and changes in the company's fundamentals. In addition, Buffett does not hold a large number of stocks for a long time. He has owned hundreds of stocks, but only a few have truly held them for more than 10 years. Secondly, it overlooks the specific environment in which Buffett's investment philosophy operates, such as capital gains tax and corporate dividend system. Buffett's investment philosophy is largely influenced by the investment environment he operates in. For example, in terms of capital gains tax, once profits are taken, high taxes need to be paid, which makes him more inclined to hold stocks for the long term to enjoy compound interest. At the same time, the companies he holds generally have a dividend system, which also provides stable cash flow for Buffett's investments. However, these conditions are not fully applicable in some companies. Some countries do not charge capital gains tax, and the dividend payout ratio of listed companies is relatively low. How to correctly understand Buffett's investment philosophy. The core of Buffett's investment philosophy is value investing, which means finding and investing in high-quality companies with long-term growth potential and undervalued by the market, commonly known as unicorn companies. Buffett always seeks investment opportunities during market panic and remains cautious when others are greedy. Although this statement is correct, independent thinking is essential. Investors should make investment decisions based on their own research and judgment, rather than blindly following trends or listening to others' advice. We need to choose industries and companies that we are familiar with for in-depth learning and research, ensuring that investment decisions are based on sufficient knowledge and understanding. It is also necessary to concentrate funds on investing in a few stocks with sufficient confidence to avoid the decline in returns caused by excessive diversification. Finally, it is necessary to regularly review the performance of the investment portfolio and adjust strategies in a timely manner to adapt to market changes, which helps ensure that the investment portfolio always maintains a good state. Fourthly, understanding investment operations and logic. Buffett's investment operations and logic are the focus of many investors' research. His success lies not only in his prudent investment strategy, but also in his rational control of market sentiment and profound understanding of investment logic. Buffett firmly believes that investors should seek stocks with market prices lower than their intrinsic value, and emphasizes in-depth analysis of the company's fundamentals, including financial condition, profitability, industry position, and management quality. Buffett also emphasizes considering the safety margin in investment decisions, that is, buying stocks at a price lower than the intrinsic value of the company to reduce potential loss risks. Buffett also believes that investing requires patience and discipline, and investors should resist the short-term temptations brought by market fluctuations and stick to their investment strategies. Overall, Buffett's investment operations and logic are based on a robust knowledge system and emotionless operations. He achieved long-term stable investment returns through in-depth analysis of the company's fundamentals, adherence to the principle of capability circle, implementation of safety margin strategy, concentrated investment, maintaining rational decision-making, and patience and discipline. What kind of investment operations and logical understanding should we have? Firstly, we need to maintain a keen attention to the market, understand the latest economic dynamics, policy changes, and market trends. This will help us adjust our investment strategies in a timely manner and respond to market changes. Secondly, investment is a continuous process of learning and improvement. We need to constantly accumulate investment knowledge, enhance investment skills, and learn from past investment experiences. Finally, maintain rationality in investment decisions, avoid being influenced by emotions, and make decisions based on one's own research and analysis, rather than blindly following trends or listening to hearsay. The most important thing is to learn to manage one's emotions, especially when the market is volatile, to remain calm and patient, and to avoid making wrong investment decisions due to panic or greed. Fifth, the mindset of long-term investment. Buffett firmly believes in the core concept of value investing, which is to invest in high-quality enterprises with long-term growth potential and undervalued by the market. He focuses on the intrinsic value of the enterprise, rather than short-term stock price fluctuations. This philosophy enables him to remain calm amidst market fluctuations and adhere to a long-term holding strategy. Buffett believes that true investment is a long-term process, not short-term speculation. When it comes to financial investment, why not hold for a long time at the beginning and adjust our investment strategy at any time? Firstly, there is a lack of investment experience. Ordinary investors often lack rich investment experience and professional knowledge, making it difficult to accurately judge the intrinsic value and market trends of enterprises. Therefore, it is necessary to adjust investment strategies at any time, continuously learn and accumulate experience in practice, and gradually improve their investment capabilities. Secondly, the market environment is constantly changing. If investors hold a certain stock for a long time without paying attention to changes in the market environment, they may miss the opportunity to sell or face significant investment risks. And if investors suddenly face funding needs or reduced income, they need to adjust their investment portfolio to cope with emergency situations. Finally, diversified investment is one of the effective ways to reduce investment risks. Ordinary investors may invest most of their funds in a few investment products in the early stages of investment, which increases investment risks. By adjusting their investment strategies at any time, investors can diversify their funds into different investment products and industries, achieving diversified investment to reduce risks. So, for ordinary people, it is not recommended to blindly hold for a long time in the early stages of investment. Instead, they need to adjust their investment strategy according to their own situation and market environment at any time. Through continuous learning and accumulation of experience, ordinary investors can gradually improve their investment ability and achieve long-term stable investment returns. That's all for this issue. If you have any questions, you can communicate in the comment section. If you are struggling with investment and financial management in your daily life, you can follow me with your fingers and give you different perspectives to plan your investment and financial management, making your life more comfortable. See you in the next issue.
Oh,